So you just got back from the beach, sipping iced tea on a condo balcony overlooking the ocean, and now you're wondering, what if I owned a place like that? Or maybe you're driving into the real estate market for the first time and just want to avoid mowing lawns, fixing roofs, and shelling out six figures more for a house. Whether you're dreaming about vacation getaways, investing for rental income, or simply looking for your first home, buying a condo is a serious financial decision, and it could be a great one. But here's the thing, condos are very different from houses, from how they appreciate to how they're managed to what they cost in the long run, and you need to know exactly what you're getting into. In this video, we're going to dive deep. We'll break down the pros, the pitfalls, the numbers, and the facts, so you walk away with total confidence about whether a condo is the right move for you in 2025 and beyond. Section 1. Are condos worth it? Let's start by asking the big questions. Are condos worth it? In short, yes, but it depends on your goals, the condo's location, and its management. According to the National Association of Realtors, in Q1 of 2024, the national median sales price of a condo or co-op was just over $330,000, compared to $390,000 for a single-family home. That's a difference of over $55,000, making condos an attractive option for affordability. But the true value of a condo goes beyond just purchase price. Condos typically come with shared amenities like fitness centers, pools, security services, and landscaping services that would cost thousands of dollars annually to maintain individually. These perks are especially beneficial for first-time buyers, retirees, or people who travel frequently. Condos also offer lifestyle benefits. Urban buyers can live in the heart of a downtown where single-family homes are rare or prohibitively expensive. A condo in a walkable location near shops, restaurants, and transit increases convenience and resale value. In fact, a 2024 study by Redfin found that walkable urban neighborhoods command a 40% premium on average over non-walkable areas. On the flip side, condos come with monthly HOA fees, which can range widely from $200 to $800 or more depending on the building and its amenities. These fees are non-negotiable and can increase over time. Buyers must factor them into long-term affordability and not just focus on the purchase price. So again, are condos worth it? Well, if you're looking for lower upfront costs, hands-off maintenance, and a centralized lifestyle, then absolutely. But you'll need to do your due diligence on HOA health, reserve funds, special assessments, and long-term operating budgets, which we'll talk more about later in the session. Section 2. Do condos appreciate in value? Condos do appreciate, just not always at the same pace as single-family homes. According to NAR data from 2018 to 2023, condos appreciated at an average rate of about 4.5%, while single-family homes climbed closer to 6% annually during the same period. The difference may seem small, but it compounds over time. That said, appreciation is largely driven by location. A high-rise condo in Miami Beach or Manhattan will appreciate much faster than a suburban condo in a stagnant market. As urbanization continues and remote work reshapes demand, centrally located and well-amenitized condos are seeing accelerated appreciation, sometimes even outpacing major metros benefit most. For example, Zillow's 2024 market report showed that condos in Miami appreciated over 8% year over year, compared to 5.9% for single-family homes in the same market. This trend held true in similar coastal and high tourism regions like San Diego, Honolulu, and Orlando. Another factor that influences condo appreciation is supply and demand. Because land in urban centers is limited, developers tend to build upwards. With more people preferring walkable, low-maintenance lifestyles, demand for condos is strong, especially among millennials and Gen Z buyers, who now make up over 50% of first-time home buyers. One caution to look out for is not all condos are created equal. Units in poorly maintained buildings with mismanaged HOAs or outdated amenities may stagnate in value or even depreciate. You must look at past appreciation data of both the building and the surrounding neighborhood. Use sites like Redfin, Realtor.com, or even speak with local appraisers or local real estate agents to understand historical trends. In short, yes, condos do appreciate, but appreciation is hyper-local and dependent on management, amenities, and the desirability of the surrounding area. Choose wisely, and you're likely to enjoy long-term gains. Section 3. Is a condo a good first home? For first-time homebuyers, condos can be a fantastic stepping step into home ownership. The price is often lower, the maintenance is easier, and the lifestyle can be more convenient, especially for those living in urban environments. According to Lenders Tree's 2024 survey of millennials buying their first home, 28% of respondents said they preferred condos over single-family homes due to affordability, proximity to work, and reduced responsibility for repairs. With inflation pushing housing prices and mortgage rates hovering above 6.5% in many markets, condos provide a more accessible entry point. One huge consideration is the HOA. Every condo community has one. The HOA is responsible for managing shared expenses, enforcing rules, and overseeing maintenance. According to the Community Association Institute, there are over 400,000 HOA managed communities in the US alone, and more than 74 million Americans live in them. The average HOA fee nationwide is about $340 a month, but that varies dramatically. High-end buildings with elevators, concierge services, or private parking can exceed $1,000 a month. What's important isn't just the fee, it's the financial health and the leadership of the HOA. Section 4. Are condos a good rental investment? Condos can be excellent rental properties, but only under specific conditions. First and foremost, don't invest until you're financially ready. As Dave Ramsey and other financial experts advise, you should own your primary residence outright and pay 100% cash for the investment condo. Why? Because rental income isn't guaranteed, and being over-leveraged in real estate can destroy your finances if the market turns. Once you're ready, choose a local condo, especially if it's your first investment. You'll want to keep a close eye on management, tenants, and the physical condition of the unit. Eventually, you can expand to long-distance investing once you have systems in place. The biggest risk, the owner occupancy rate. If over 50% of the units in a building are rented out, banks may deny financing to future buyers, reducing demand. According to Fannie Mae's lending guidelines, a building with more than 49% investor ownership may be ineligible for conventional financing, driving down resale values. Another concern is rent restrictions. Some HOAs limit how many units can be rented, restrict short-term rental entirely, or impose tenant screening rules. Always review the HOA bylaws and leasing restrictions before buying. Run your numbers carefully. Factor in HOA fees, insurance, taxes, vacancy rates, and property management if you plan to hire help. A condo that rents for $2,200 a month may look attractive, but after $500 of HOA fees and 10% management costs, your real net income might be much lower. Bottom line, condos can be a great investment if you understand the numbers and invest with discipline. Now that you have the information in front of you, is buying a condo in 2025 a smart move? Well, to answer your question and your thoughts, yes, only if you do your homework. Condos can offer affordability, lifestyle perks, passive income, and appreciation, but they also come with unique risks. HOA fees, rules, slower appreciation, and financing hurdles. If you're ready to make a move, here's your homework checklist. Review the HOA's finances and rules. Research appreciation trends in the area. Make sure the building has strong owner occupancy. Understand all rental restrictions before investing, and always run the numbers. Don't buy on emotion. If this video helped you, smash that like button, hit subscribe, and comment below. Are you thinking of buying a condo this year? Thanks for watching.